Reporting.
Honey, can you define bad debts?
A bad debt is an amount that is written off by the business as a loss to the business and classified as an expense because the debt owed to the business is unable to be collected and all reasonable efforts have been exhausted to collect the amount owed.
Tina, can you tell us how to appear it to our balance sheet?
The bad debts is immediately written off by crediting the debtor's account and therefore eliminating any balance remaining in that account.
Please look in the illustration to find out how to make it. Illustration of provision of bad debts.
Accounts receivable 100,000 pesos. Less allowance for bad debts 5,000 pesos. Net receivables 95,000 pesos.
Bad debts on sample balance sheet.
The example of bad debts on balance sheet. Remember that the debts should always under the assets column. That having solution to indicate the debts. Entitled accounts receivable net.
Although the allowance for doubtful accounts does not appear on the preliminary balance sheet, experienced accountants realize that it's likely that the sum of the accountant's receivable might not be collected. If some of the $4,600 owed to the company will not be collected, the company balance should reflect less than $4,600 of accounts receivable. However, rather than reducing the balance, the accounts receivable by means of a credit account, the credit amount will be reported in an allowance for doubtful accounts. The combination of debit balance in the account receivable and the credit balance in allowance for doubtful accounts is referred to as the net receivable value. Let's assume that the value of the accounts receivable indicates that approximately $600 of the receivables will not be collected. This means that the balance in allowance for doubtful accounts should be reported as $600 credit balance instead of the preliminary balance of zero. The two accounts involved will be the balance sheet account allowance for doubtful accounts and the income statement. Bad debit 6. Allowance for doubtful accounts. Balance sheet accounts. Debit decrease the contra assets. The credit side increase the contra asset 0 preliminary balance 600 adjusting in 600 correct balance. And the bad debts expense income statement account. Debit side increase an expense preliminary balance 0 adjusting entry 600 and correct balance 600. The credit side decrease an expense. The adjusting journal entry for allowance for doubtful account is date December 31, 2007. Account name debit and credit. Bad debt expense debit 600 allowance for doubtful accounts credit 600. It is possible for one or both of the accounts to have preliminary balance. However, the balance are likely to be different from one another because allowance for double account is a balance sheet account. Its ending balance will carry forward to the next accounting year because bad debts expense is an income statement account. Its balance will not carry forward to the next year. Bad debt expense will start the next accounting year with a zero balance. Unearned revenue is a liability account that reports the amount received by a company but have not yet been earned by the company. For example, if a company required a customer with a poor credit rating to pay $1,300 before the beginning any work, the company increased its assets cash by $1,300 and it should increase its liability and earned revenues by $1,300. As the company does the work, it will reduce the unearned revenues account balance and increase its service revenues account balance by the amount earned. A review of the balance in unearned revenue reveals that the company did indeed receive $1,300 from a customer earlier in December. However, during the months, the company provided the customer with $800 of service. Therefore, at December 31, the amount of service due to the customer is $500. Let's visualize the situation. The following the accounts: unearned revenues, balance sheet accounts. Debit side, decrease liability, adjusting entry 800. The credit side, increase liability 1,300 preliminary balance, 500 correct balance. Service revenues, income statement account. The debit, decreased revenues. The credit side, increased revenues 63,234 preliminary balance, 800 adjusting entry, 64,034 correct balance. The adjusting entry for unearned revenue is General Journal for Entries. Date December 31, 2010. Account name Unearned Revenues, Service Revenues, Debit, 800 credit. Since unearned revenue is a balance sheet account, its balance at the end of the accounting year will carry over to the next account. On the other hand, service revenues is income statement account and its balance will be closed when the current year is over. Revenue and expenses always start the next accounting year with 0 pesos.
Income statement, ba't ganun may? Income statement, ba't ganun may?
OMG, I don't have an assignment in accounting. It is so rushed to make it. I don't know about the... OMG, I don't have an assignment in accounting. It is so rushed to make it. I don't know about the... Illustration.
Hoy!
Illustration.
Account receivables, 100,000 pesos.
Illustration.
Account receivables, 100,000 pesos.
Illustration.
Account receivables, 100,000 pesos. Less allowance, 5,000 pesos. Ulit. Ba't gano'n nagtigot-tigot ka? Baliktad! May ba na record? Ba't gano'n nagtigot-tigot ka? Baliktad! May ba na record? From the burning news of